YouTube channel. My name is Joe and I'm your Forex architect. I'll show you my USDCHF setup, which was a winner, and I'll also get a chance to show you the Euro Australian dollar, which is in progress right now and it is doing well, as you can see. Yeah, so subscribe, like, and welcome to the family as we grow together. It's just a beginning, yeah, and there's good things coming, believe me. Yeah, so thank you. Let's go into the charts. And on the daily time frame, you can see that the market over the long term it has been rallying all the way down, but recently it has this nice pullback where the market was pulling back, because as you can see, this section which has been squared right here, it's a downtrend, and in this downtrend it is just a push phase of this move right here. So this downtrend which has been formed out here, it's a push phase of this daily time frame downtrend, and this small subsection right here, it's just a pullback of this push phase right here. So let's go on to the 4-hour time frame. Going down to our 4-hour time frame, you can see that this right here, it is the pullback on the daily time frame. So understanding that the market was just in a brief pullback in the daily time frame, so we understand where this uptrend is coming from on the 4-hour time frame. You can see that this pullback is about to end, because this recent higher low right here has been broken, and the market has proceeded to form a new lower high and lower low. So with that in mind, we can look for any point of interest where we can short the market, and that's where we go to our 1-hour time frame, so that we can easily identify point of interest and wait for the market to tap in so that we can find an entry. Looking at the 1-hour time frame, you can see that here is where the market changed, the trend changed its movement, and we broke this recent higher low. So how I identify my point of interest is I usually look for the move which led to the break of structure, and I'm interested in that first candle which led to the move, So here's what I'm saying. As you can see, there was this change of character, and the market shifted from being an uptrend to a downtrend, and it later confirmed by forming a new lower low. So the market at that, I entered with this bearish engulfing candle right here, and then the market proceeded to go up, but as it was going up, I was scaling, or rather I was stacking new positions. So my first entry was around here, and then I ended up stacking more positions as the market was getting deeper into my stop loss zone, and then the market eventually went in our direction. So that was a winner, and I made about $90 without subtracting the commission and the swap and everything. Yeah, so that was for USDCHF. Next on, we'll go to Euro Australian dollar. That was my second trade, and it was also a winner. So let's check it out. So starting off on the daily time frame, we understand which direction the market was moving, and you can see the market was in a nice downtrend, and it had reached to this trend line right here on the daily time frame, and the market currently was in a downtrend. So that's the daily direction of the trend. We go down to the 4-hour time frame to understand if there is any setup we can try to utilize. So looking at the 4-hour time frame for Euro Australian dollar, what you can clearly observe is that the market was in a nice uptrend, as you can see, but the market reached a point and started forming this series of lower high and lower low. So what that means for us is that the market has shifted from being an uptrend to a downtrend. You can see on the 4 hour time frame there is this nice resistance. That is one nice point of interest, and the second point of interest on the 4 hour time frame is this highest or rather the farthest point to the left that the market has touched. So we have two important point of interest. One is a resistance zone and the second one is a 4 hour point of supply. So all you have to do is set our reminders near these 4 hour zones, so that if the market taps in those zones, we can observe the price action going on around the zone. So let's go on the 1 hour time frame and see how price reacted on both zones. As price was approaching this 4 hour zone right here, there was no bearish movement, or rather any bearish action happening. So we ignored the zone because the 4 hour candle was able to close above the 4 hour zone, and if a 4 hour candle breaks above a 4 hour point of resistance, that zone gets invalidated, and that happens on every time frame. So if there is a daily zone, I want to see a daily candle closing below it so that the zone remains valid. If a daily candle closes above the daily zone, the zone gets invalidated. The same with every other time frame. And remember, the higher the time frame, the more significant a zone is. So that was just an extra point on zones and how they get invalidated. So when price violated the first point of resistance, our first point of interest, I was not interested with that zone anymore. So price continued to rally up and it came to this 4 hour point of supply. And as you can see, looking on the left, there has not been any recent price action happening. So if you see such a zone, the zone is so strong because since the market pushed down from that zone, it has not touched it again. So if price gets back there, there'll be a small reaction that will happen there, and that is what we are trying to utilize. So as you can see, when price came to this zone on our hourly time frame, we can see that the bullish momentum started to reduce and there was this long wicks being formed, and then eventually there was a bearish momentum which came into the market. So what I usually recommend is, if anything like this gets to happen, set your stop loss a few pips above the highest candle, and then you can set a limit order anywhere between the first bearish engulfing candle, because the market tends to fill in the gap, as you can see, this gap right here, and then continues to rally down. So, and if you're afraid that the market might go down without getting you into the trade, you can just have an early entry, but it will have a poor risk reward ratio. So this is the other trade which I took, my second trade, but here was the problem. I was supposed to get a nice 1 to 2 or 1 to 2.5, yeah, because I was stacking positions as the market started to pull back into the zone. But here's the problem, here's where the problem came in. There's this point of resistance right here on the daily time frame, and I was not so sure if the market would break the zone. So what I did is I waited for price to get there and see how price would react to the zone. And as you can see, when the market got to that zone, there was this rejection going on. Okay, so I hope up to that point you have understood what I'm saying. So if you check at GBP Australian dollar, as you can see, the same reaction was happening. And as you know, the Euro pound and the Great Britain pound are highly correlated. So for Euro Australian dollar and GBP Australian dollar, their moves are almost the same most of the times. So when I went to confirm the GBP Australian dollar, I saw that the market had more reasons to go up than down. So I moved my stop loss from here and I put it somewhere around here. and as you can clearly see, that was a 1-to-1. So I ended up making around the same amount of risk that was on that trade. So this trade was, the profit was not so big. I made only 1%, or rather a 1-to-1 risk reward, and I was happy with the profits because at least I made something. But at the same time, I was sad because I left a lot of profit on the table. And that is something I'll keep on trying to improve. So that was for Euro Australian dollar. That is how I got to enter the trade, and I was supposed to get a nice profit in this trade, but it is what it is, and life moves on. So the next trade which I took was GBP Australian dollar, and that gives you a reason why I was able to leave this trade, because I can't be having a buys position on GBP AUD and a sells position on Euro Australian dollar, because those two contradict each other. That is the problem of trading a lot of currency pairs. There's a lot of contradiction, when it comes to correlation and everything. So let's go to the GBP Australian dollar and see what went on, because that trade was a loser and I did double my risk. I usually risk 0.5 of the account, and 0.5 is $30, and this round I decided to risk $60 because the trade, it was a breakout trade, and breakout trades tend to have a nice risk reward. It eventually went into my direction, but that is after it hit my stop loss, because NFP was around. So let's go to GBP Australian dollar and see how I got to get that $60 loss on the crop farm challenge.